presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. Hey, John, what's going on, brother?
Hey, Tom. Good afternoon to you. How are you?
I'm doing great, man.
I want to thank you, first of all, before I ask you about the stock. You and Tim Ward and all the gang at TFNN. I had a really, really good year after the October call you guys made. My 401k is up 72%.
Congratulations, man.
A couple of things I made with Coinbase and other stocks that I made, and I've had a good year.
And we appreciate you growling and prowling with us, man. That's a beautiful thing.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. We're not having the camera on today, but we will have it on hopefully by Monday. Let's take a look what we got going on in the market. Man, quite a bit of stuff happened today. Wild market yet again. You did have some fantastic moves by our guy, Broadcom. We'll talk a little bit about that. You're up 7.85%. As we've been saying on this show, out of all of these big tech or chip companies, Broadcom is best positioned, I think, to continue growth. I don't think it's seen its max amount of growth potential. ASICs are going to be extraordinarily important. These are like, if you think about it in a biological way, this is like these specialized organs in an organism itself. And I just think the ASICs are massive. And that was reflected in their earnings report. So you have movement of 7.98% right now today. We'll see if we can traverse back up around to that 200 level, 240 before these massive, this massive turn down. I think the argument for Broadcom is still there. I think these guys are dominant. I think what they make, again, as I will reiterate, is different than things like the GPUs, and I think they're extraordinarily important. Again, am pretty neutral on GPU manufacturers. Same thing with NVIDIA. I think NVIDIA had a lot of exponential growth baked into it that wasn't really sustainable. At 112.63, I still think you're good because you're at a 2.7 trillion market cap. Now, while GPUs will probably be, larger volume-wise, right? I think the real value is going to be in ASICs. I've also been reading some things recently about the potential dominance of CPUs in the future as opposed to GPUs. At some point, we should probably go over that. We can talk a little bit more. I don't know currently who would be positioned to benefit from that. Of course, Intel has quite a bit of experience in the CPU realm, but I think as I've said multiple times, we are 0.99% today. Their leadership is just not there. I mean, they don't even have a CEO, but the board is a massive issue. If they cared about the company, they should probably step down or at least stop having a say in how things operate in this company. It is just unfortunate. The SPY trading up 0.65%. You have some decent volume already today. Of course, you cracked down even lower in the morning, down to 565.30. We've recovered most of that to be green currently. You're up 0.59% at 576.21. I still think we're probably in a phase of this market where any kind of bump to the upside is going to be used as exit liquidity. You have a lot of capital going into money market funds, and I think that will probably stay that way. The reason I say that is because a lot of this is driven by macro uncertainty, and I believe the current administration will continue to add uncertainty to the market. Perhaps you don't get any insane, maybe you don't get more selling to the downside unless new developments occur, but you certainly don't get this rally back up to 613. Now, I think we probably will try to test that. I think there's a lot. I think the sellers have basically sold at this point. We'll see what happens. But anytime this market's going to move higher, I'm anticipating further sell-offs. Right? It just kind of makes sense. I think people want to get into cash. They're not trusting what's going on. Of course, you're having gold contract. Of course, you're giving back a little bit today, but we're still at these super elevated levels. Talking about some of the miners as well. You're looking at Harmony. You're up 9.82%, which is fantastic. Take a look at AEM. You're up 1.09%, and then Barrick as well. Take a look. I think these are some of the strongest gold equities right now. You're up 1.68%. I really do recommend, of course, we talk with Tim Ward, and on Tuesday we're going to have some, rather specific equities to look at as opposed to just the GDX in and of itself. But I also want to say, check out the Gold Report, right? You have Tommy O'Brien authoring it now, and him and I spoke sometime this week, and kind of his insight on the miners I thought was fantastic. And I think you see his insight kind of reflected in, things like Barrick going up, like AEM, like Harmony. And you see the L's taken in companies like MUX. Anyways, strongly recommend checking that out. Again, if you want to do so, you can go to TFNN.com, go right over the newsletters tab. We have the Gold Report right there for you. If it's your first time doing the Gold Report, that's totally good. You can do it completely risk-free. I know we have a lot of new listeners, especially on YouTube. We have a 30-day money-back guarantee on all of our newsletters. You can do this risk-free. No strings attached. Take a look right now. The SPY is trading up 0.66% at 576.51. The composite about 0.82% at 18,219. Dow Jones Industrial up about 0.61% at 42,835. With the Russell Futures trading up 0.71% at 2,085. Your dollar, man, really moving down. You're at 103.84, and the dollar off about 0.25%. Crude oil continuing to go up. We're going to wait for the Tiger Forex report, which is released on Mondays. But Teddy Keckstat goes over, crude as well, and I've always really liked his analysis on it. He's actually one of the guys I defer to on crude. But of course, if you look at general macro environment kind of pressures on crude oil, you have essentially a threat against Iran, right? If a nuclear deal is not reached, Trump says he's going to hammer their oil production very heavily. So that, of course, raises this price here. It is interesting to me, however, that it's not, usually when you have geopolitical uncertainty like that, you can get very wild price swings. You're not necessarily seeing that currently in crude. So if you want to stay tuned for that, of course, you can get the Tiger Forex Report newsletter. Take a look at the gold contract off about 0.42% at 2,914. You have copper trading off about 2.05% at $4.70. Let's see, silver off about 1.33% at 32.89. Let's see what else we got going. Celsius kind of recovering a little bit, up 6.85% today. What is Palantir doing? Up 5.34%. Something interesting to note with Palantir, again, not a lot of volume here. Looks like you're really, listen, it's some perfect stuff here. Really filling these gaps in a lot of these major equities. Of course, it's got a little bit of the Trump bump, but you have so much selling going on here that I can see the energy not following through, at least right now. We'll talk a little bit about Hegseth, some of the ways he could be helping Palantir, some of the ways he could be harming Palantir as well. So if you stay right there, we'll be right back. We'll go over, we got a lot of stuff to talk about today. Stay right there.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstak's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstat releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. Jacob Shoup, you're watching the Tom O'Brien Show. Let's talk a little bit, before we go on to Palantir, a little bit about these labor numbers, the non-farm payrolls. At 151,000 jobs added versus 160. Employment rate comes in at 4.1 from 4 flat. Payrolls, of course, yeah, like I said, 151. You have the employment rate, the average hourly earnings. So this is, I will be the first to admit that I might have been a little maybe jumping the gun or a little too negative on the general outlook of the market by saying that I think we might be entering a period of stagflation. I mean, you had hourly earnings increase. I mean, you have a decreasing month over month, right, from 0.5 to 0.3%. But year over year, you're still up 4, which is less, but not by much. I think it's 4.2 or something, the period prior. So that growth is still in there. Inflation is still prominent. I think inflation will get worse if the tariffs continue. But, I think one of the, that's not necessarily stagflation. Yeah. Like, it's just, of course, it depends also the growth in the wages relative to the growth in inflation. You got to consider all that kind of stuff. But, you're not getting this stagnation in a major way, at least in the wages. So I think I was probably incorrect about that. We'll see if that persists. I think as well, there's probably a large portion of the market or the economy as well that suffers from things like stagflationary kind of environment, while a smaller percentage is really carrying this to the upside. So we'll have to wait and see. But that is not necessarily bad. Of course, you have unemployment upticking. Inflation is kind of stabilizing out, at least as it seems. Again, I think this does get threatened by the potential for tariffs. So, I mean, in reality, if Trump can just kind of stop throwing curveballs, you might get into, and things persist this way, you might get into an environment where you say, hey, maybe it is time to think about lowering interest rates at some point. Now, of course, you had a lot of federal employees get completely fired, and so that's adding to it to some capacity. So we really have to wait to see after Trump's done with all this what I think the true conditions of the market are itself. But it is interesting. It's not as grave as I think I had been anticipating. So that is kind of nice to see. I still think things are tough for everyone, but these things improve. Sometimes you go through these kind of periods. Let's look here. I want to talk a little bit about earnings. It's been so interesting the past few weeks with earnings. Let's take a look at what we got going on. Obviously, of course, today, you don't really have anything that's too interesting as far as I'm concerned. maybe Algonquin Power, but that's about it. But let's look on Monday. This is the 10th of March. You have Oracle, which is massive. Again, this is another kind of staple in the economy, I think. And if they do not do well, meaning I'm sure they'll crush it for last quarter. But if their forward guidance is any sort of underwhelming, we're going to go lower. We're going to go lower in the market for sure. You have Franco-Nevada as well. UEC, which is super fascinating. This is going to, I would say, demands kind of a closer look. What are we trading at? You're off 1.28% right now. Let's see here. Is there a potential to buy some puts on this company? I think personally the uranium stocks, and then definitely things like Oklo. I don't think Oklo is going to do very well. I think they're different than some of the competitors in that they don't have a product. They burn through cash. And we'll take a look at that as well. But I want to pull up UEC on Edgar quickly. Because one of the things that UEC does, and again, what I always say on it, what I like about Quad U is they're actually moving this stuff out of the ground, selling it. They have vanadium. They have a lot of different gigs rocking. I like U. I think it's cool. I'm going to just call it Quad U as I always do. You're off 1.79% in that. We take a look at UEC. They're pounds in the ground type guys. Of course, as I've said in the past, they do have stockpiles of uranium that they bought lower than spot, so that can float them. But the question is, are we seeing more contracts being signed for uranium planning out, let's say 5 to 10 years in the future? Give me a second as I pull this gig up here. You have cash and cash equivalents. Okay, so this is for what was released in December. I believe that's Q1 of 25. So you have an increase in cash, which is nice, even from the quarter prior. But that's not really what we care about. They have good total assets, 917 million, versus total liabilities, 93 million. Doesn't seem like they have really any major debt or anything like that. Sales are up a tad, but cost is much higher. Your profit is there. So it seems like they have been able at least to start selling some stuff in 2024. In the beginning of this fiscal year, 25. Now, you have a massive net loss, which is roughly about $20 million for them. And I don't know if this necessarily gets better. And this is a really quick, dirty, just kind of look at their balance sheet. You should definitely read everything with the 10K, but I don't want you guys to sit here and watch me just read something without speaking much. So we'll take a closer look on this on Monday, hopefully before the earnings. I think it should be after the bell from what I'm seeing. I can see this moving a little bit lower as well. Again, this whole entire concept with trading in uranium, but at least on the short term, if you want to do long term, that's great. I mean, again, suggest CCJ, Quad, like these are players. UEC potential, I think there is more, again, I say risk in this company because they really haven't started extracting a lot. But again, the play for these guys was headlines, right? The headlines did not involve earnings because they're in a bad spot, right? So the idea was, hey, we're going to keep building, or we're going to try to start building these nuclear reactors to get this power, and that's amazing. Man, let's pile in, to uranium. Moves up, you sell that out, wait for it to come back down, you keep going up. When you get around to real things like earnings, right? And we're going to talk about another company too, where the beauty and the headlines were great, but when earnings comes around, it's like, yeah, this is the real reality of the situation. That's most likely going to be the case for UEC. It's certainly going to be the case for Oklo. Now, they could do some saucy forward guidance, but I mean, man, I don't know if you guys remember, it was like a Friday or something. Thing was trading at like $43, and I was like, this thing is going to get eradicated on earnings because they do not have it. That valuation they had was roughly like, I think almost $6 billion, and it didn't make any sense. You're still at $3.2 billion for Oklo. You are trading a heck of a lot lower. There might still be the potential to buy puts for earnings. We're getting to that support level, right, that had been sitting at around $20. So that becomes a little bit riskier. So we'll wait to see. If we pull up Oklo, a moment here. We'll stay right there. We're going to pull up Oklo. I'm going to take a look and tell you how much money they burn, because they burn a lot. And they're not really making anything at all. So folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Cheap watching Tom O'Brien Show, taking a look at Oklo. They have earnings coming out the middle of next month. Trying to see maybe we can get some puts on it. Again, you have this strong support here, so that is definitely something to keep in mind. Your cash and cash equivalents is nuts, to be honest with you. It's 92 million, 91.8. Marketable securities, you have nearly 140 million. So your total current assets for this company is $230 million, which is pretty nuts, okay? Your total liabilities are, again, that's current assets. Your total liabilities are only 30 million. Okay, so really what this company is in the middle of is using this cash to try to see if they can make these fast nuclear reactors, right? And so what this is at this moment is just basically a race against, well, really their cash reserves. Yet operating expenses in total for, let's say the last 9 months, so we're going to get their 10K coming up, so this is for September 30th, was $37.4 million. Okay, so I mean, you have some kind of runway with that cash of 91 million, right? I mean, I would anticipate that, you know, research and development, general administrative continue to go up as they try to get an actual reactor built. So, you know, that's one thing to consider. Let's see what else they got cooking right here. Yeah, total net loss was 60 in 9 months ended September 30th was 63 million. And so that's pretty intense. Yeah, I mean, how long can they kind of sustain that? And it even says here, right, is the company, quote, plans to commercialize its liquid metal fast reactor technology. First commercial Aurora powerhouse is designed to produce up to 15 to 50 megawatts on both recycled nuclear fuel and fresh fuel. And listen, I like the fast reactors. That's definitely the way this is going to pan out in the future. We're not going to use these binary reactors or whatever they call them. We're going to use these fast reactors. It's just the question of, can this thing sustain that amount of spend, of cash burn, right? I mean, can they get more funding? They could, you know. I mean, it looks like they've spent 25 million all stock on Atomic Alchemy, like a refining company. But, you know, for me personally, I think when it comes out, I think they'll probably have spent more money on this. I'm not sure how much more they got. I'm not sure what the future is in this environment for them to get more funding, right? These guys have a long time to run before they're profitable. This isn't like a company that's been cooking around for a long time and, you know, making nuclear reactors that are like, hey, we're going to start designing this new product. They haven't done anything at all yet. And so they have a long time, and a long time means you're going to burn a lot of cash. And I don't see cash spend, you know, basically going lower, you know, before they get some kind of reactor. So that's kind of my thing with this. I think this got a lot of hype because of everyone saying, hey, we need megawatts upon megawatts of power. Maybe natural gas can't handle that. You had some discussion from the Biden administration being like, hey, maybe we're going to start looking into it. Of course, you have government agencies talking about nuclear power as well. I do think that nuclear power is the future, but when you're talking about a market now that is very sensitive to any amount of bad news, you know, this starts to become not very appealing. Yeah, it's a $3.2 billion company that is just consistently burning through cash, and they don't have a product yet. So we will see what goes on with the Oklo. I really might buy some puts for that, even if it's at that support line, you know, for earnings. They'd really have to pull out something very, and of course that's obviously a massive risk, right? But because they could pull out some big thing, but you're looking at what they've done, it's just not there. That's kind of my thing. Quickly look at LTBR, because I believe these guys have a memorandum of understanding to use it. This is, again, some doped uranium. It's very interesting stuff. LTBR up 1.85% today. Oh, and they had earnings, and it was moving quite well. Where is that? Yeah, that's right. Oklo joins Energy Department program for Kickstart Nuclear Powerhouse Development. LTBR is involved in this. This is a super interesting concept, right? It's not just uranium, but it's this kind of enhanced version of it that should have better kind of energy yield from it. So that's kind of neat. Talking about megawatts, take a look at Nebius. Again, I think this is a super attractive place for Nebius. 2777. You've moved down. This is just a sensitive equity. I've added more at this level. Now, making sure not to get carried away or anything, but this is a part of my long-term portfolio. I think people are still not completely familiar with Nebius. The more that changes, the more attention this gets. And then I believe, their plans, how they've executed things thus far, and their leadership will kind of speak for itself. Trading up about 3.21% today at $5.5 billion. Expanding U.S. footprint with new 300 megawatt data center in New Jersey. Of course, they're servicing Europe in a major way. I believe they were in Finland. They have some other spots in Europe, which is massive. Again, think about it going forward that Europe's going to wake up and start spending on their own stuff, right? They're doing their own Starlink with ETCMY, right? That Euroset. Let's see what that's actually doing today, right? Because that had a massive, makes sense. That had a massive run up to 260. I wish this would load because I do want to see kind of what the market cap is for Eutelsat. But these are the ones building out. So everything that we've been doing, right, with expanding our defense, expanding our cyber, expanding AI, expanding, anything to do with low Earth orbit, the Euros are finally waking up. And I strongly recommend, if you want to be the most educated investor you can, you got to listen to these big meetings that they have, right? And of course, you have to be discerning enough to know what's, whatever, just theater, and then what's a legit thing. But I mean, you have van der Leyen saying, like, this can't be this way anymore, right? I mean, we as this country, under this administration, are taking a step back from the global scale, at least in the global scene, at least in the way that we have been operating in it. That does leave Europe in kind of a weird situation where they have been focusing on a lot of strange things, a lot of maybe more abstract social issues, which is, fine. I mean, every nation is determined to do their own thing. But I think without America there, the realities get a little bit hot for Europe, right? If they don't do this stuff, again, with Eutelsat, and really I talk with the AI and the compute, right? Nebius is right there able to provide that. Europe doesn't do anything this century. So I'm bullish on Nebius for sure for those reasons. And of course, expanding to the US is fantastic as well. Folks, stay right there. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. Jacob Shrew, Tom O'Brien Show. It's on the Oklo. Someone did say, wasn't Oklo well connected? Or aren't they? Yeah, they are. But I think at some certain point, you know, this kind of macro environment is just really, I think, hostile to stuff like Oklo's current way of operating. And Sam Altman's, don't get me twisted, right? I mean, this is definitely, you know, that's definitely a risky move, but I think this capital is coming out first. You know, I think at some certain point you can be well connected, but if the environment's just going to pressure everyone else to be like, hey, just run away, you know, favors aren't always really, you know, done that way. So that's my thoughts on Oklo. All right, anyways, let's see what else we got cracking. You have Hegseth coming out. He's directing the Pentagon to standardize and speed up U.S. software buys. So again, this is kind of what I'm saying with the reduction of the budget. That did spur, Palantir needed to come back down anyway. But when they came out and said, hey, the Pentagon's not going to spend as much, the military itself is not going to spend that much, everyone's like, oh no, we got to get out of this. You know, the integral portions of the military are going to get a lot of money. I think the border still gets a ton of money. Okay, it's just there's these massive wastes in the Pentagon, and you know, I had a family member who worked. I didn't know him, but he worked for the Pentagon, and then his son, I believe, was a contractor. And I mean, this was during the time where you could sell, you know, hammers for like $40 or something like that, right? And so, I mean, there's something along those lines where it's just like, hey, we're reducing your budget anyways. I know you guys are spending this much. You know, you're buying bearings for, you know, one bearing for 13 grand or whatever the heck that big kind of Air Force debacle was with Boeing. And I think that's what's getting cut. But it doesn't mean like these things are necessarily integral get cut or any less funding. I think that's probably the only you know, immediate saving grace for Palantir. Of course, you had some bearish pressure with it, with Hegseth saying, hey, we're going to stop cyber operations against Russia. That's very interesting. I still think we will bolster our cyber defenses. I think it'd be very silly not to do that. And then, of course, now you have Hegseth coming out and saying, hey, we need to get this software purchased, sped up, standardized. He's saying software is the core of every weapon and supporting system we feel to remain the strongest, most lethal fighting force. And that's really what it is, right? This isn't like some crunchy, hey, we're not going to be, you know, we're not going to keep spending money into developing our military. I think we definitely are. I think it's just going to be probably a lot, it's going to be watched a lot more, I would say, right? Hegseth is very much, and so is Trump too. I mean, what's that whole saying they have? It's like peace through strength, right? You don't get that unless you continue to build out, and we need to be on the cutting edge. And as we've discussed plenty of times, American systems are kind of behind in some ways, right? Definitely the telecom system. I didn't understand. I think Trump was cutting like the cybersecurity office. Now, I think he's probably going to integrate that into the Space Force. But regardless, this stuff needs to be built out in a way more serious way. I mean, you could take a look at things like Palantir, of course, CTM as well. Probably get more contracts coming off 4.37%. But this is holding exceptionally well. at this level. A 79 million market cap, you know. Oh, you have insider selling. Ooh, that might be worth looking into. But you did get this 103 million Navy contract. I think that's over 5 years, 5.5 years. So you know, do it that way, you know, what roughly like 20 or something along those lines, 18 million. So, you know, if they can get more, you start looking at market cap like, okay, yeah, they're deleveraging, which is fantastic. It's somewhat appealing. Of course, penny stock, low float. I still think they need to issue more shares. Maybe they're waiting for this to clear or something like that. I'm not sure before issuing. I'm sure we're going to hear that pretty soon from them. It's definitely worth looking into, but of course, you know, always, you got to look into it because this could just be part of a compensation plan for them. Of course, this rallied an insane amount and we're still holding quite well above that $1 area. This is good development for them. Speaking in line with some more AI, let's say cybersecurity, not necessarily that big bear is that, but it has to do with security in some capacity. You're off 20%. Okay, this is, yeah, you have this massive decline because everything is declining, but this is a massive gap down on their earnings. And this is kind of going into that general framework, the same thing with like Oklo or UEC. You get these major hypes to the upside, some interesting news, and then earnings comes around, and then people are like, I see, this is where we're actually at right now. And listen, it rejected that low today, which is decent. You know, I don't know, let's just go to the day. So I'm trying to eyeball that, of 313. Okay, and you're kind of saying here, you're not seeing much selling off after that. Now that could be retail just holding the bag entirely. And so regardless, that gets you a floor. You know, and you come out with some of their forward guidance, it wasn't exceptional. And again, you know, they keep naming these contracts that they get, and they're not massive contracts. There was one, the most recent contract they had, I forget if it was with NASA or something like that, or just the military, but there was a subcontractor on it, and it wasn't fantastic, you know? And then you're looking at forward guidance of about 165 million. Yeah, we're trading at 846 million right now. And yeah, they could get new contracts, but I don't like their history of what they do when they get contracts, which is not really name the dollar amount, kind of wait for people to find that out. That's just what they do. That's just what they do. So, you know, there are positives here with the company. I think that as it stands right now, this seems like pretty accurately valued. You know, based on the contract size they get, definitely based on the financials, you know, regarding the market cap. Let's look through some of the revenue increased 8% to 43.8 million. Okay, that's not necessarily huge growth or anything. Gross margin, okay, was 37.4% compared to 32.1% year over year, primarily driven by the year-end fringe and overhead, true-up allocation adjustments, okay. EBITDA of 2 million, SGA at 22 million, ending backlog, okay, was 418 million as of December 31, 2024, an increase of 250 million or 2.5. That's not bad. That's pretty solid. And then revenue, this is the forward guidance of 160 to 180 million. And then adjusted EBITDA is negative single digits. Okay. And they've deleveraged as well. So it's not bad. This is a turnaround moment for the company. I think they could make this a good company, but as it stands now, it's almost like kind of, that's a high valuation if you have, you know, forward guidance of only 165 million. You know, you have to really start seeing some massive pickup with it. And they did say, to be honest, they said at 160 to 180, but I think they're looking at like 165 was their exact target on it. So that's my thing with Big Bear Holdings right now. Again, you know, when earnings comes out, just the reality of the situation is there, and you got into a bad way that the market itself is already kind of flipping bearish a little bit, right? So those gap downs are a little bit more maybe accentuated. So folks, Sarah Theory, we'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. We got a short segment here. Let's talk about Apple. Okay. What we're doing right now? Trading up 1.49%. Okay, makes sense. Not really. They said that they're delaying the AI-infused Siri assistant, which I think is really the main driver for them. But hopefully, this is to wait a little bit longer. I think you can put this thing natively on the phone. We saw with DeepSeek, you can get these distilled AIs to do a lot of stuff. The average person does not require the compute of what these non-distilled language models offer. It's just not necessary. So they confirmed that it's delaying the release of the new AI-infused Siri digital assistant, saying the company now expects to roll out the software sometime in the coming year. The effort will give Siri, quote, more awareness of your personal context, as well as the ability to take action for you within and across your apps. So then the question for all of us, IT nerds out there, is where's all that data being stored? Is it going to be able to run natively like we know it can, with things like DeepSeek, or is it going to communicate? Again, this is my argument with Copilot. This thing like taking snapshots of your computer and it said, oh, it only stores it natively and it only sends it to a metadata. Okay, no, that's stuff weird. I don't like that at all. The same kind of thing with this, but I do believe from an equity perspective that will probably be relatively appealing to people. And I mean, you did see an increase in personal PC buying when things like Copilot with Qualcomm Snapdragon was put on it, and I would assume that's probably the same with Apple as well. So you're trading up 1.66% right now today. Very light volume on Apple right now. SPY up 0.66%. Hey, we had some. This is today. Ha! Look at me. Volume a little bit less than yesterday, but still pretty equal. Folks, thank you so much for joining me. We'll see you tomorrow. Well, no, we're gonna see you Monday. How about that? Have a great weekend, folks. See you then.